In this video, traders, we're going to look at 3 different ways of trading breakouts. Hey traders, a very warm welcome to you. So, listen, breakouts, you either love them or hate them. Most traders don't really like them that much. They like them in theory because it gets on the end of a great move. They're pretty simple, right? You draw your support and resistance. We can all draw support and resistance. You wait until the price comes through it. It breaks through it. You buy it. The thing continues on. You make some money. You pocket it. You go home. It all sounds very nice, doesn't it? But you know, and I know, if you've been trading for a while, it's not always like that. It's often you get caught on breakouts that don't happen, fake outs. We even talk about strategies, standalone strategies that are there to capture fake outs. So how do we trade breakouts? I've got 3 ideas for you on ways to trade breakouts a little bit differently from the traditional just buy on the break. And let me show you the first one. The first one I've got in front of you, Euro US dollar 15-minute chart. The first way of trading breakouts is to wait for a flag well above the breakout level or well below the breakout level. Here is a decent level of support, resistance that I've drawn on, excuse me. We've broken through. Now, of course, if you bought the break there, you'd be very happy. And we look at hindsight and we say, yeah, we could have done that. But in the heat of the moment, sometimes we say, you know what, I don't want to be chasing this thing. I want to wait and see if this is going to hold and it's not just going to do this. Okay, because we see that a lot, right? And that's the classic fake out pattern. So what are we looking for? We're looking for this bull flag scenario. So the flagpole goes up through the resistance or the support, depending on where we're going. We get the flag and then we trade the flag in the traditional manner. Now, is there much meat on this one? No, there's not. There's enough to make a decent trade out of it, but it's not going to make you a billionaire. The point is, why does this work better? It works better because as it breaks through, it's an acceptance of a new price level. 15-minute chart here, we've got probably 10, 15, maybe even 20 candles there. I'm not going to sit here and count them. A lot of candles, a lot of time where this is assumed now to be the new level in price. That's the point of a bull flag anyway. And when we break through a really key level and we get the acceptance of a new level in price, the chances are you're going to get a resumption in the move and you're going to get some more meat on that move. You're going to have to take some profits from that long trade. It stops you from chasing it and not knowing it's going to reverse. It allows you to put a very quantified, very sensible stop position. It allows you to let the market tip its hand a bit more before you start putting your hard-earned cash on the table. Another one here for you guys, I've got Euro Pound, this time on a 60-minute chart. This one is about, number 2, is waiting for a pullback to the breakout line. This is not revolutionary, but it's something that can be very, very handy because it can really make that entry a sweet spot. So here's our resistance level from the highs here. We've broken through and it goes back from here, in case you're wondering, thinking, well, you've only drawn it on one. It actually goes back from the resistance level here. So it's a pretty decent resistance point. We break through and we start to roll back. Now, this is where you would normally get screwed over, right? You're buying this breakout, you say, oh, I want to buy the close here on a 60-minute, and the thing rolls over and you start taking a bit of heat, you don't like it, etc, etc. If you don't like it for whatever reason, you don't think it's extra aggressive, whatever the situation may be, you can just say, you know what, if it pulls back to the break level, I'll buy it. Perfect for swing traders, this. You recognize the breakout or you set an alert, you're out and about doing other stuff, you set an alert, the alert goes off, in market moves away from it, and perhaps the better way of doing it, guys, is to put like a line here, 2 lines, 1 alert on this one, 1 alert on this one. When you get your second alert, you log onto your mobile device and you add a limit order in for there. Obviously, you've done all the research before that. I'm not suggesting you do this on the fly. But the point is, you've analysed this, you say, hey, if we break that, I will buy a pullback to the line. So you put 2 alerts in, 1 on the break, 1 when it's gone X amount of pips, 10 pips, 15 pips, whatever the ATR happens to be of the market. When you get that, then you log on, then you place a limit at your breakout level or you have it pending and you set it live, whatever you need to do. And that gives you a little bit of an edge because, okay, you're going to miss some and it's going to carry on, just fly off into the stratosphere. But the point is, if it's strong and it's good and this then holds, this resistance then becomes support, you've got almost a pip perfect entry, and this thing, you know, can continue and do whatever your thesis, your broader thesis is. Another one is similar to or third and final one, should I say, is similar to the flag, but it's a little bit different. We've drawn our resistance in. I've got AUD USD. I've got a 15-minute time frame here. And by the way, this works on any time frame, these kind of three strategies. You wait for the breakthrough, but often you get this scenario, and this is a great example actually. I'm glad that I found this one. Decent resistance level, as we can see, goes back a long way, and from intraday follows through to the next day. The dotted line, vertical line here is the next day. We push through, and we don't do it convincingly. And you know what? I've been in this situation, I'm sure you have as well, where you're forcing the break, you're trying to get on it, it's not going, you're getting stopped out, it's not going, it's in momentum, and this thing stays here for multiple hours before finally deciding to get, you know, the throttle down and get rolling. So what are we seeing here? We're seeing the price holding mostly above that really key level, and that's it. Okay, there is another level up here which is possibly to be alerted for, but assume that we've just got this resistance level now and we want to trade off that. Okay, assuming that we're looking at the prior day, which is this day here, from here to here, and we're trading off that high. We want to see how it's performing at that high. As the market goes on, it sort of messes about a bit, but then it starts to hold above. You know, when we see the hold above for a long period of time, that is indicating that, again, this is perhaps considered a new level, a new price, a new fair price for this AUD USD, and then it gives it a floor and a base to accelerate from. That's exactly what happens in this. You know, there's plenty of meat in this trade, plenty of juice in the trade, meat on the bone, whatever analogy you want to use for this. So three ways of doing it. One is you're waiting for the flag, which is slightly different to this, where you got a decent pull through and a flag well above, indicating that's the new value level. Two, we're waiting for a drive to push up and pull back to our key level. And three, waiting for congestion and hold above. And we're looking for probably a couple of hours or an hour in 4 to 8 candles on a 15-minute chart above that level to signify that that's new and accepted. Bears haven't considered it value enough to smash it back through the lows. Bulls aren't that aggressive yet, but the premise is that bulls are going to step in and we're going to continue because that's new value. The bears are going to throw in the towel and we're going to get a shift up and we're going to get a nice move pushing to the end of the day. And obviously in this example, if you had it at the end of the day, high of the day, you would have got a nice trending move off it. So anyway, guys, there's three different ways of trading breakouts. If you like this kind of stuff, give it a thumbs up. Much appreciated. Comments in the comment section below. As always, see you in the next one. Take care, guys. Bye bye.